Good evening, everybody. This is Dan Girolamo, Big Boomer. I am here with Mark Mouche from US Comics, also with Ryan Rippey from Entrust Financial, and they're going to present to you some information that allow you to understand the process of specific self-directed IRAs, et cetera, from a licensed, trusted, independent financial institution. So without any further ado, I'm going to turn this over to Mark Mouche and Ryan Rippey. Thank you.
Great. Thanks, Dan. Good evening, everyone. My name is Mark, and I'm here with Ryan to discuss with you how Karatbar's affiliates can integrate into an entrust self-directed IRA solution. I want to point out that this is an easy thing to do. It's not simple. If we follow the steps, it actually becomes manageable. There's some disclaimers that you need to be aware of. Karatbar's International does not render tax, legal, accounting, investment, or other professional advice. This material is for informational purposes. You'll see the tax circular notice. We're not endorsing any one particular solution, and of course, seek the advice of a professional if you have any questions. You know Karatbar's International as one of the leaders in the small size distribution of 4/9 gold, and it's a fantastic product that we've all been able to use very effectively in our own business development. Entrust is an innovative provider of self-directed IRAs. It's an individual retirement account, and those accounts are applicable to U.S. taxpayers, whether or not you're a resident or overseas. But as long as you're paying U.S. taxes, then you probably have come across the IRA option. And we'll have Ryan present all the really cool stuff about IRAs. Generally, this works for a SEP IRA, a Roth IRA, a traditional IRA, a 401k, rollover IRA, and in limited circumstances, a self-directed 401k single participant plan, but that's complicated, and stick to the IRAs and you'll be fine. This works if you are already a Karatbar's International affiliate. If you're not, this won't help you much. If you have liquid IRA assets that you're willing to transfer to Entrust and put into a self-directed IRA, this will work just fine. Here are some of the federal regulations for the IRA accounts, the different publications that describe what you can do for investments, what you can do for using your account, the setup of your account, what the government does and doesn't do when it comes to their own requirements for reviewing trustees and third-party administrators, what that government doesn't do when it comes to investments. And I encourage you to look at this information, do your due diligence, and you can find more information at the irs.gov website. Unrelated business income tax, or UBTI, depending on what school you went to for your accounting. They call it a couple of different things, but really it's the same type of thing. And this is income arising from the conduct of unrelated trade or business that is regularly carried on. The other definition is debt-financed income, which comes in the form of rent, interest, and royalties. And again, Ryan will be talking a little bit more about it. You can have UBIT in your IRA. It doesn't create a penalty, but you have to do a lot more bookkeeping. You have to file more tax forms, and in general, you should avoid it because it just makes your life more complicated. Again, speak with your CPA or tax advisor if you have any questions about UBIT. Assets that are allowed in IRAs, everyone's familiar with stocks, bonds, mutual funds, and those types of things. The government has a provision for a precious metals IRA account. That's not what we're doing with Karatbar's. But with a precious metals IRA account, you're allowed to buy specific coins that are minted coins, and you can buy specific grades of bullion but that gold or precious metals must be custodied within the U.S. in a bank or trust company. It can't be in your physical possession. What we're doing with Karatbars in order to make this all compliant with the regulations is your IRA, your self-directed IRA, invests in a business. That business becomes a Karatbars affiliate, and you as the guiding light of your own self-directed IRA will manage that business. Karatbars maintains the gold that's acquired by your affiliate account in a segregated ProSecure vault, separate from all of the other gold that Karatbars maintains for its affiliates. There's a dividend reinvestment option. These accounts pay a dividend, not a commission. The other really big difference is that there is no Karatbars debit card issued to this particular type of affiliate account. You end up using the e-wallet instead. Generally, when it comes to investing in a business, your IRA cannot purchase a private stock that you already own. So if you're thinking that you're going to use an existing company and you'll invest your IRA assets in it, no, that's not going to happen. Your IRA, you as the IRA holder, participate as the manager, if you will, of the LLC or the business trust that gets created. We'll talk a little bit about that in a minute. There are a class of people called disqualified persons that Ryan will talk about that can't interact or have limited interaction with the IRA accounts, and depending on what happens, create prohibited transactions. But again, more on that soon. The IRA can't be a general partner and cannot invest into an S corp. The earnings must flow into the self-directed IRA, and there's a possibility of UBIT that gets created, but the way that Karatbars has structured the affiliate account for these particular types of accounts, the UBIT issue has been resolved. Disqualified persons and prohibited transactions, something that every IRA doesn't want. Generally, a disqualified person is the individual IRA holder, a spouse or significant other, children, or parents. So in those kind of direct contacts, and again, Ryan will speak about this some more shortly. What's your role with your self-directed IRA? Well, you are the manager of the investment that your IRA buys, and you need to perform the due diligence, and you need to review the vendors that you use, and everything that a business would normally do, you're responsible for as that holder of that self-directed IRA account. The record keeper, in this case entrust, is going to do all of the IRS reporting kinds of things. And as such, they're not doing the bookkeeping of your business, but they're doing the bookkeeping for your IRA account. And so you'll have a requirement to provide information once a year to entrust so that everything stays compliant. So what happens with entrust? Entrust is going to facilitate the creation of one of two entities. If you're a California resident, you'll use a business trust, and that's to reduce the amount of franchise tax board fees that an individual would have to pay if they were to use an LLC. So we use a business trust instead. Everyone else in the country gets to use a limited liability company, and all those will be generated out of Arizona. How does this work? The individual, I'll say you'll create your own IRA account, and that IRA account will be a self-directed IRA for whichever flavor of IRA that you happen to have. If you have a traditional IRA, you'll have a traditional IRA at entrust. If you have a Roth IRA, you'll have a Roth IRA at entrust, and all these will be self-directed. The next step is that a legal entity is created, the business that we were just talking about. Then you'll create your Karatbars affiliate account, while all that's happening, you're going to be transferring the funds from your current custodian to entrust as your new custodian. Once your business is formed and it has its EIN numbers from the federal government, you'll open up a local business bank account. Then you'll instruct entrust to fund your business bank account, at which point your business will acquire a Karatbars package, and then we'll start acquiring gold if you use the 12-week plan, or however you decide to structure your business, then you'll start that process. And the gold won't be shipped to you. You need to be aware of that. It's going to be stored at ProSecure in that segregated vault. Once a year, you're going to have to report the value of your business to entrust for their reporting requirements. So Karatbars will provide you basically a push-button report that says, here's the value of the account, and then you'll have to take that along with the value of your business bank account and anything else that your business acquires, and report that to entrust for their purposes. How much is this going to cost? Well, that's a really great question. Ryan has graciously waived the $50 setup fee for these accounts that are going to be opened in the immediate future. Once the account is opened, then we start the process of setting up the business. Now, if you're in California, the cost has been discounted from $1,950 to $1,050. So we have almost a 50% discount because of the Karatbars relationship. If you're using the LLC model, then it's also about a 50% discount, and your IRA will end up paying about $720 for that LLC creation. That's the state fees and the operating agreement and all that good stuff. Then on an annual basis, you'll have a $30 registered agent fee. Entrust will charge you an annual asset fee of $295, and then there'll be some miscellaneous fees that you'll be responsible for. Wire transfer fees, if your prior custodian charges you a surrender charge, depending on what asset you have, all those are the responsibility of the IRA. Your other cost will be whichever package you decide to acquire as a new affiliate, and then whatever bookkeeping costs or other miscellaneous costs that you have in running a business. Because again, this is a business inside of your IRA that you've created. So how does this work? Say a husband has a traditional IRA, and the husband also has a Roth IRA, and the wife has a wife. Great, that didn't make sense. Has an IRA also. So you have three separate entrust IRA accounts. If everything's set up at the same time, those three accounts can buy the single LLC and have shared ownership of that LLC, and that LLC becomes the Karatbars affiliate. So it is possible to minimize some of your costs by how you structure this whole thing. So there's a lot of flexibility in this, is the point to take. How does this work? From a bigger picture, you have a self-directed IRA that's at entrust. You create the business trust or LLC, depending on where you reside. That business trust or LLC becomes the Karatbars affiliate, and the gold is stored in Germany. All of this is compliant with what the IRS says, because the investment for the IRA is the business, and then the business happens to be an affiliate. And so everything works the way it's supposed to work. What we've done is set up a website for gathering kind of information so that we can better help you through this process. It's www.karatbarsira.com. It's just a real simple page. It asks for your name. It asks for your affiliate user number or name, your phone number and email so we can contact you. And then it also asks for your senior partner information so that we can make sure that they help coach you through this process as well. This is, again, just for our own internal purposes to help you through the process. You'll then download the entrust account forms, whichever is appropriate for your circumstances. You'll fill out. You'll talk to your Carrot Bars affiliate senior partner before you set up any of the accounts so you can make sure that you're placing them correctly and where it will most benefit you and your family. If you follow the steps, you plan well, and you execute the plan, then you'll end up with a happy life. It takes about a month to complete this process because we have to do the transfers between custodians and all that good stuff. So don't expect that this is going to happen overnight because that will just frustrate you. And with that, I'd like to introduce Ryan Rippey. He's become a good friend and a great strategic partner for Carrot Bars in the implementation of these really kind of neat tools that we have available with the self-directed IRAs. Ryan?
Thank you, Mark. I appreciate you having me on the call today. Thank you, everybody, for joining to do your due diligence to understand the process and understand who I am, who Entrust is, and I commend you for being on the phone call today. I appreciate that, and we'll go ahead and get started. So, as Mark said, my name is Ryan Rippey. I work currently for the Entrust Group, self-directed IRAs. I'm going to go ahead and talk a little bit about some different things that are going on with us. But first off, the disclaimer here is that the Entrust Group is that we do not provide any type of investment advice, nor do we sell or endorse any type of particular product. So all the information today, the materials that you're going to see, are for educational purposes only. We will always encourage our clients or potential clients to consult with, their attorneys, accountants, financial advisors before entering any type of investment. Again, we don't sell or endorse any particular type of investment, so I'm here to educate you, and wanted to go over that disclaimer with you. Now, a little bit about us, just so who's the Entrust Group? Never heard of them. We're the largest administrator in the United States of these types of accounts, self-directed accounts. Entrust has been around for close to 40 years. We're definitely one of the pioneers or leaders in the industry. Our staff is extremely knowledgeable. We do have some local offices that may be in your backyard. They may not be. However, I can handle the entire country. So you have a designated rep, which is me, which is great. You can talk to me directly. You can send me emails. I can, help you throughout the process. I also have, administrative employees ready to help you and answer your questions as well. By all means, we are educators. I don't like to say that I'm an expert in the industry, but I'm very knowledgeable in the industry, and I understand it. So you're in good hands. So we are going to go over, the agenda today is not real estate investments, but the agenda today is particular to your concept. We are going to go over limited liability corporations and how they work. We're going to, go summarize everything. We'll do a Q&A. The definition here of an IRA is, there are different types of IRAs. As Mark mentioned, there's the traditional, there's the Roth, there's the SEP, simple, individual 401ks. So in which all are self-directed. I mean, probably one of the biggest misconceptions out there in the industry is that, a self-directed IRA is a particular type of retirement account, which it's not. Whether you have a traditional, a SEP, a simple, a Roth, they can all be self-directed. What that means is, the Entrust Group is an alternative administrator to these accounts. We allow alternative investments on our books. We also help you, in this case, we would help you oversee the creating of the entity and making sure everything's titled correctly. And I'm going to go over that process as well. Making your own investment choices are amazing. I mean, stocks, bonds, mutual funds are not your only choice in investing within a retirement account. You can invest in what you know and understand, which you're on the call for a particular reason. You can invest in what you know and understand, which is amazing. Diversification is key. Diversifying your portfolio. I mean, some of you might go, well, I'm not completely going to bring all of my money over, but you can leave some of the money in stocks, bonds, and mutual funds. and you can bring over partial transfers or the full transfer. It is completely up to you. It is your money at the end of the day. We're just here to help you administrate these types of investments. Contributions may be tax deductible, earnings are tax deferred or tax free, which is the major point of this. You know, when you are investing your money out of this entity into your alternative investment, the returns on that investment are tax free. You know, ultimately you're tax deferred because eventually when you do distribute the money and want to put the money in your pocket, you would then have to pay taxes on it. So how that works, since we're on that subject, if you're under 59.5, and now this is excluding the Roth, because the Roth is different because you're paying the taxes up front. So I'm talking a traditional IRA, a SEP IRA, a simple IRA, those types of IRAs. If you are going ahead and setting those up, you know, under 59.5, there's a 10% penalty if you take a distribution. Okay. Once you reach age 59.5 with these particular type of accounts, the 10% penalty drops off, and then you can distribute without penalty. However, you still have ordinary income tax, in which you will then report on your taxes. We'll report it on a 1099-R, and you know, ultimately it's up to you when you want to distribute that. The government doesn't tell you you are mandated to require a minimum distribution based on your age, and that is not until 70.5. So once you reach age 70.5, there you'll find the government's going to say, you know, minimum distribution years, you know, we're going to force you to distribute based on a life expectancy table and how much money you have in that particular, you know, IRA. You know, Mark mentioned one of the things that you have to give to us on an annual basis is a fair market valuation of your account. What that is a value. Okay, so let's say in your entity you have, you know, you may have diversified it. You have, you know, alternative investments with care bars. You may have alternative, you know, investments, you know, in potentially lots of different investments out there that you can do. However, what you would do is you would then give us a value on the assets that you hold in that account. All we're doing is reporting that to the IRS on a form called a 5498. On a 5498, we report, you know, contributions, any contributions made to these accounts. Now, these are still retirement accounts to where you can still contribute. You know, if you want to contribute, you know, for instance, a traditional IRA is $5,500 per year. Once you reach age 50, it goes up to $6,500 because there's a catch-up provision. You know, a SEP IRA, who are for more self-employed individuals who get 1099, can contribute up to $52,000 per year, 25% of your earned income. So it's a very powerful type of IRA, a SEP IRA. Again, you do have to be self-employed to have a SEP IRA, and you're limited to 25% of your earned income, but you can give up to $52,000 per year. Pretty strong. So if you do make a contribution, we report that on a 5498 to the government, as well as the fair market valuation that you give us on an annual basis. And going back to the distributions, if you do decide to distribute money into your hands and, you know, pay taxes on it depending on the age in which you are, which I went over, then we'll report that on a 1099-R. So when Mark mentioned, you know, the entrust group does the reporting that's mandated by the IRS, that's the reporting that's being done. So we administrate the investment. In this case, it would be the entity, which I'm going to go over, as well as do the reporting on contributions, distributions, and fair market valuation. So that's a kind of a snapshot of who we are. Obviously, we're going to walk you through the process of setting up your IRA account with us. You know, it's very simple. It's a 4-page application, you know, asking you, you know, personal questions, your beneficiary information. You sign a disclosure, general fee disclosure, which will be very simple. It's a two-page thing. We need a copy of the driver's license. Now, keep in mind too, if your address is different than your driver's license, we just need a utility bill for that address associated with your name if the address is different on your driver's license than your legal address. Just a little hint there to help me process these quicker. And then ultimately all we need then is a transfer form filled out with a current account statement from your resigning custodian to request the funds to be transferred. So all in all, Mark said, give it a month's time. That's a generous amount of time. It will be done less than 30 days as long as you go through the steps that are involved, step 1, step 2, step 3, and I'll go over those at the end again. But it can be very simple. It's not hard. You're not getting into some complicated things. You rely on us for a lot of the information. You rely on us for the reporting, and you rely on us to oversee the transaction into the entity, make sure the entity is set up correctly, and the cash is funded all in one to turnkey operation. So Mark had mentioned prohibited transactions, rules and regulations. Internal Revenue Code 4975 is realistically, any transaction between an IRA or disqualified person that's prohibited. They're wanting to see arm's length transactions, no self-dealing. What that means is, for instance, Mark had mentioned, we're not sending the gold to you guys. If you were to have the gold and you could touch and feel it and, hide it wherever you'd like, that would be prohibited. That's a prohibited transaction. Falls under Internal Revenue Code 4975. What happens if the IRS audits you? And again, there's no red flags there. They'd have to randomly audit you. They'd have to, even if they saw your IRA account, that doesn't mean they're going to ask you, what type of investments you have within it. But if they do, and they find that there is a prohibited transaction, they can what's called disqualify your plan, which basically means distribution of your retirement account. You pay the taxes on it. You're not going to lose the asset. You're just going to have to be forced to distribute it, which then the asset would be re-registered or renamed into your name personally, and it's just basically taking an early distribution on your investment. However, obviously, we want you to stay away from those prohibited transactions, not put yourself in that situation. Now, the other part of the Internal Revenue Code 4975 under disqualified persons is, particular people that are disqualified to your IRA. The first person is the IRA holder. The IRA holder is disqualified to the IRA, meaning, let's say you had some alternative assets you already personally own. Therefore, you couldn't have your IRA or the entity in which your IRA owns invest in those assets because you personally own it. Therefore, you would have to sell those assets to your IRA or your IRA entity, which would be prohibited. So how that falls into place is everything's got to just be brand new. The investment needs to be brand new. The entity that we're going to help you create will be brand new. Okay, so some of you may be thinking, oh, Ryan, I have an LLC or I already have an entity. I'll just go ahead and use that. Not the case. Okay, and I'll go over that and I'll go over the steps associated with it. And then who else is disqualified to the IRA other than the IRA holder would be the IRA holder's spouse. And then how the code reads is your natural lineal ascendants and their spouses, and your natural lineal descendants and their spouses. So those are the people who are disqualified. Now you heard Mark mention you can partner. Let's say I have an IRA, I have a traditional IRA, and I have a Roth IRA, and then my spouse has a Roth IRA. So there's 3 accounts. I have a traditional Roth, and my spouse has a Roth. I can partner all of those together into the same entity and put all my money into the same business checking account because I'm doing it at the same time. That's the key. The key to partnering, especially with a disqualified person like a husband and wife, is you have to invest into that entity at the same time. Because let's say the husband did it before his spouse did it, and then he owned all those shares or units of that entity, and now the wife wants to get into that entity. He would have to sell those percentages to his wife, which is prohibited. But if they start at the same time and buy brand new shares units of that entity, it is permissible because they don't exist. Nobody owns them. So that's the key to that. Okay. So realistically, what is a self-directed IRA LLC? It's a limited liability corporation allowed in a particular state. The reason why we're talking about doing business trusts or business investment trusts in the state of California is because an LLC entity in the state of California has an $800 annual fee. In lieu of that, the business trust is not in the state of California. So the business trust is specifically for California residents. It is a little bit more expensive to set up, but there's no $800 annual fee, and it still gives you the requirements you need to have your IRA invest in that entity, as well as obtain an EIN number and beneficial trust documents or articles of incorporation, if we're talking LLC, to be able to go to a bank and set up a business checking account. So it offers benefits of a corporation with some limited liability. Obviously, I'm not an attorney, but everybody knows an LLC is a limited liability corporation that limits some of your liability. The IRA itself already has protection from creditors. Somebody can't just come sue the IRA, that type of thing. So actually putting your IRA money in an entity like this is actually putting more protection into your retirement account than you had before, which is nice. You become or elect yourself as the managing member of that entity LLC or that entity business trust, which allows you to oversee it. This allows you to record keep the entity. This allows you to cut checks out of that entity. This allows you to receive income coming back into the entity and deposit it into your newly formed business checking account. Those are the overseeing capabilities. Now, keep in mind, you cannot compensate yourself for doing that. Okay, that would be prohibited. So you're realistically, you get to run this entity, cut the checks, receive the income, overlook some of the documentation without having to pay anybody. But in return, you cannot pay yourself as well. So keep that in mind. The LLC is a legal entity able to purchase assets. In this case, pretty much any alternative asset under the book. There's three things. Mark had mentioned a little bit about it. Collectibles, life insurance contracts, and S corporations are the three prohibited assets that the IRS doesn't allow you to invest in through a self-directed IRA. Collectibles, it has to be deemed as a collectible. Life insurance contracts, pretty obvious. And then S corporations, because the way they're structured, an entity like an IRA, because an IRA by definition is a trust, cannot own an S corporation, only individuals. So there's kind of the nutshell of prohibited assets within the entity. But in this case, once it's in the IRA LLC, you just need to stay away from life insurance contracts, what's deemed as collectible, and then S corporations. Some of the advantages and disadvantages of the LLC. Disadvantages. Yeah, there's a little bit more cost to create, but in this case, this is the way we have to structure this deal. In order to, get your money, your IRA money into this entity, be able to control it within these types of alternative investments, this is the particular case. However, you do get the checkbook control. Okay, so that's one of the advantages. Hey, I get to oversee everything. This is my money. Who loves my money more than myself? Nobody. So I have immediate access to my funds. I have ease of investing. I'm going to save on fees because under our administrative costs, if you have multiple assets on the books, we're a per asset under administrative company. By creating this entity, you only have one asset on the books. I don't care if you have 100 different assets within that LLC. Under your IRA money, you're only going to be charged one flat administrative fee, which is nice. And then, of course, limited liability protection from particular claims. Again, cost to create, you're going to oversee or maintain your records. Let's just say, hey, Ryan, I want to hire somebody to maintain my records. I want to hire somebody to do the record keeping on it. Can I do that? And the answer is yes. But if the person is considered a disqualified person, the list I went through, spouse, lineal descendant, or their spouses, you cannot pay them. But if it's outside of that, you could actually compensate them for, overseeing or maintaining your records. The subject to state tax filings and check whether you're financial or tax advisor. I mean, realistically, that's a disclosure, letting you know that the IRS looks at an IRA LLC as a disqualified entity. You're not typically going to file a tax return. It's tax-deferred money. It's not like there's any 1099s or K-1s or W-2s being cut. The money's coming back in tax-free because of the type of entity that it is. However, ultimately check with your CPA or accountants. Depending on the state you're in, there may be a couple different things there. Getting started is easy. Open an account. How long does that take? Once I have the correct forms, again, it's just an account application form, a general fee disclosure form, and realistically, all we need is those two forms and your driver's license to open up your account. Takes a couple days. That is it. A couple days, and then you have an account open. What can take a little bit of time is funding your account. You see there's 3 different ways of potentially funding your account. You can make a contribution. Oh, Ryan, that SEP IRA just sounds right up my alley. I'm self-employed. I made $100,000 earned income. That means what Ryan said, I can put up 25% of that. So I can write a check for $25,000 into my SEP IRA as a contribution and fund this thing right now. Get my IRA entity set up and get that money transferred over. I'm in business. That's how quick you can do it. The transfer is if you say, hey, Ryan, I got a traditional IRA, or I have a Roth IRA, or some other type of IRA with, another custodian, which is more of a traditional custodian like a Charles Schwab, Edward Jones. And you say, look, I'm going to liquidate my investments in stocks, bonds, and mutual funds. I'm going to put it in what's called a cash status to be able to transfer an IRA to an IRA, which is not a taxable event. Okay. You'll give us that you'll fill out the transfer form. You'll give us an account statement. You'll sign it. We'll send it out to your resigning custodian. As long as it's in cash status, which is a key there to, however much you want to bring over, make sure it's in a liquid form. Then they'll send that money right over, and then we'll finish out the transaction for you. A rollover would be from an old 401k. 401k money can be rolled into an IRA, most of the time, not all the time. So let's talk about that. If I have a 401k, how do I find out if I can roll it into an IRA? My first question is, are you currently employed with your 401k as of right now? So let's just say this. I work at Costco, and I have a company 401k. I contribute, they match, blah, blah, blah. That means you're pretty much still employed with that 401k. Most of those are locked. Most of those can't be rolled out into an IRA without penalty. However, there's triggering events take place in which a 401k can be rolled into an IRA. The main one is retirement. Okay, so as soon as you retire, or you quit, or you leave that job, it opens up a window for you to be able to roll that 401k money into an IRA. If you're terminated, if you lose that job, that also opens up that window for you. And then there are some circumstances, some variables that could potentially allow you to roll over those funds, which is death, disability, or divorce. If there's some type of, compensating factor there, they may allow you to roll some of the funds out. There's the last one, what's called an in-service withdrawal provision. I'll say that again. In-service withdrawal provision. In-service meaning you're still employed. Withdrawal meaning they're allowing you to roll over some of the funds into an IRA. And the provision means it's been adopted by that plan administrator. If you go, how do I find this out? You can look in your table of contents of your plan administrator docs, and it will list an in-service withdrawal on there if you have one adopted. Or maybe the easier way is just to contact your plan administrator and say, hey, I need to know if I have an in-service withdrawal provision because I'm currently employed, with my 401k here. So I wanted to spend a little bit of time on that just so you understand. Okay. So let's walk through this. You open an account with me. We are working on getting the funds transferred over. In the meantime, now we're working on establishing your LLC or your business trust. Use of an advisor recommended. I have everything ready, turnkey. Mark, I already mentioned to you, I've already lowered the fees substantially just for you guys. I mean, there's nobody in the country that can get these fees other than you, honestly. I mean, we worked really hard on getting this affiliation and getting these prices for you. So you're in great hands there. Keep in mind now that money that we were talking about to create the LLC or create the business trust has to be paid out of the IRA. And I know Mark mentioned that, but I want to emphasize on that you must pay for the entity creation through the IRA. Very important to understand that. So that helps strategize, going, okay, yeah, it's going to cost me X amount for the entity. It's going to cost me X amount to get everything transferred over. And then, oh yeah, Ryan said there's an annual administrative fee for $295 and that type of thing. Keep in mind, for my fees, which is the entrust group, for my fees, whether it be their setup costs, the annual administrative fee, transaction fee, wire fee, that type of thing, those can be paid from a credit card. So that is the only time in which you can pay out of your pocket for fees associated with this entire thing is fees associated with the entrust group, because we're your administrator. So you can pay us through the credit card, or you can actually elect just to have the IRA pay for everything, and then you're good. Okay? So, but for the creation of the entity, it must be paid out of the IRA. It cannot be paid out of your pocket. So then what happens is now your entity is established. Okay, what does that mean? If you're in California, you have a business investment trust. Okay, so you're going to be given beneficial trust documents. You're going to be the elected trustee of that entity. You're going to take your beneficial trust documents. You're going to take your EIN, and you're going to go down to a bank and set up a business checking account. There's one particular bank in California that has helped me tremendously with a large amount of these business investment trusts that an IRA owns, which is Wells Fargo. I'm not saying you should absolutely use Wells Fargo, but they're very understanding of it, and they're a large brand in the country, and they're easy to work with. So I can give you a contact there, or you can just go to a Wells Fargo provider and go through that way. Or you can pick any other bank. In regards to the LLC, what are you going to be given? You're going to be given an operating agreement, you're going to be given articles of incorporation, and you're also going to be given an EIN number. You'll take your articles of incorporation, your EIN number, and you're going to go set up a business checking account. And then they'll give you wiring instructions, and you'll give that information to us. And then once we oversee the transaction, we will fund your IRA money directly into your business checking account. We'll wire it right into that. Keep in mind, the very important thing on here, and probably, the most important thing for us to oversee is the IRA owning this entity. So in an LLC, it's going to be the member of that entity is going to be your IRA. It'll be the Entrust Group, Inc., for the benefit of, as FBO, for the benefit of, Jane Doe IRA, account number, however. Okay, so that's going to be the owner. That's going to be the owner of the shares units of that entity, or the beneficial interest of a business investment trust that is going to own that entity. However, the IRA holder, can elect themselves as the managing member of those entities to oversee it, to gain checkbook control over it, and to basically record keep that or administer that entity. Okay, so at that point, once we wire the funds over, and once we've overlooked your operating agreement or your trust documents from your business trust, you give us the wire instructions. There's a couple internal forms that you're going to have to sign, but it's not that hard. We will send that money over there, and it's ready to now invest into alternative investments as soon as that hits your account. Now, Mark mentioned that I'm going to waive the $50 setup fee. I don't have a whole lot of time to do this. So, this particular coupon is up the 15th, which I know is, guys, it's Tuesday, right? So if you want to get this $50 free, I suggest you send over my, account application form, my general fee disclosure form, copy of your driver's license, and the transfer fee, and I can get it waived. Now, moving forward in the future, I will work on getting some other discounts for you in the future. But this particular webinar, I'm going to need to get your account pretty quickly to get this done. In the future, you are saving. Ultimately, like Mark said, the cost involved in setting up these entities. The cost has been cut in half. It's a substantial amount of money. So at the end of the day, yes, you can save $50, but down the road you have to pay the $50. You're saving hundreds, if not thousands of dollars through the entity setup and cost. So you're coming out good in the end, believe me. So to summarize this, there's endless opportunities for any type of alternative investing, whether it be real estate, whether it be, care bars, which we're talking about today, any type of alternative assets outside of, the three restricted assets that I went over earlier. You get maximum control of your retirement money. Live life by design, not by default. How amazing is that? Taking control over your retirement funds and direct it into the investments you want to invest in. I'm not going to sit here and listen to a financial advisor tell me this stock or this bond or this mutual fund, yada, yada. So this allows you to have that. Your IRA owns that LLC, not you personally. but you get to oversee it and basically, manage it. And then direct checkbook control, access to the funds to purchase and maintain the LLC assets, which is very nice. It is turnkey, set up for you, ready to go, less than 30 days, ready to rock, okay? I know we might have some questions here, Mark, and we want to talk about that. I also want to put up this slide because here's my contact information. I know Mark set up that particular link, which is great too, but if you want my direct contact information, there it is. There's rrippy@theentrustgroup.com. That's a really good email just to send me questions. That 949-420-4524 is my main office line. You may be able to get a hold of me the first time. If you can't, I have the most senior admin assistant in the company. Her name is Rebecca. She's great. She'll be helping you throughout the processing as well, setting up the accounts, any questions on the forms. Any question really on anything, you can direct them to my assistant, Rebecca, if I'm not available. Believe me, if I had a cloning machine, I would clone myself probably 12 different times so I could answer everybody's questions in a timely manner. But ultimately, it is a busy time. There is a lot of people, immense lot of people coming over from, more traditional stocks, bonds, mutual funds, ready to take control of their retirement account and invest in alternative assets like Carrot Bars. So, Mark, I'll turn it over to you. Let's go ahead and look at some of maybe the questions and we can answer those.
That'd be great. Let me stop the recording here.